So hello my dear friends, if I tell you which stock is bullish and good to buy, and if I tell you which stock is bearish and good to short sell, how is that? Because I know that you are buying a bearish stock and ultimately you are losing money, and you may be shorting a very bullish stock and you are once again losing money. But in this video I am going to show you how you can identify whether a stock is bullish or it is bearish just by using a single indicator, and that indicator is a moving average. It is 200-day moving average. So using this 200-day moving average, you can identify whether a stock is bullish or bearish, and you can do it within just 1 minute of your time. So I'll also show you how you can use a scan, how you can create a scan from a free site. So you can identify which stock is bullish or bearish, and you can also create your own scan, and you can scan for all the bullish or bearish stocks. So you can create your own trading strategy after you found a stock is bullish or bearish. So let me show you how you can identify and use this 200-day moving average successfully. But before that, let me give you a short intro of mine. Hello friends, I am Indrajit from stockmaniacs.net. If you want to grow your wealth from the stock and commodity markets, hit the subscribe button and hit the bell notification icon. You can also send me your stock market related queries through WhatsApp in my number +91 96743 21856. So friends, the logic is simple. Once a stock crosses the 200-day moving average, it is bullish. The more it is away or above the 200-day moving average, the more it is bullish. And similarly, once a stock crosses down a 200-day moving average, it is bearish. The more it is below the 200-day moving average, the more it is bearish. So I'll show you how you can identify a bullish or bearish stocks and how you can trade them also. So it is not like that once a stock crosses the 200-day moving average and simply you jump and buy it, or a stock crosses down a 200-day moving average, simply you jump and short it. So there will be some patterns, and in this video I am going to show you these patterns, how to identify these patterns. So let us go to a trading terminal and show you the 200-day moving average, how to use it. So friends, we are in Zerodha Kite. So we will use Zerodha Kite as our charting platform here. So I believe that you are already having Zerodha Kite. If you do not have Zerodha Kite, I'll leave you the link to get Zerodha Kite in the video description. So this is Nifty 50 1-day chart. You can see this is 1D means 1 day's chart. So Nifty 50 1-day chart, and here we will attach a moving average. So let us go to the studies section and let us go to the moving average. So you can see here is the moving average. So by default the moving average period is 50. Instead of 50 we will take 200. The field is close, so we will use the 200-day moving average on the close price, and the type is simple. Let us keep a simple 200-day moving average. So you can choose the color and click on done. So you can see this is the red line and this is the 200-day moving average. And the thumb rule is whenever a stock or the indices are trading above the 200-day moving average, so it is bullish. And when it is actually trading below the 200-day moving average, so it is bearish. So this is basically the thumb rule. And the more above the stock or the index is trading above the 200-day moving average, it is more bullish. And the more below it is trading from the 200-day moving average, it is more bearish. So you can see the current market scenario, Nifty 50 is actually bearish. Why Nifty 50 is bearish? Because Nifty 50 is trading below the 200-day moving average. We can see this date. On this date, 26th of February 2020, Nifty has actually breached the 200-day moving average, and from there it is now trading below the 200-day moving average. So at a glance we can see and we can tell that the Nifty 50 is bearish. Let us check some other example. Let us take the example of Bank Nifty. So the Bank Nifty chart has opened. You can see once again Bank Nifty is also bearish because Bank Nifty is trading below the 200-day moving average. So you can identify that 200-day moving average is one indication which direction the stock or the index can move. So there are times when the stock or the index crosses the 200-day moving average and it can show you a big rally, and there are times when the stock or the index crosses the moving average and then once again comes on the other side. So just crossing the 200-day moving average is not a trading direction. Suppose here Bank Nifty has crossed below the 200-day moving average and next day also it has closed below the 200-day moving average, but it came above the 200-day moving average once again. Here also Bank Nifty could not sustain below the 200-day moving average. So right now also Bank Nifty is trading below the 200-day moving average. So now how we can speculate the move of Bank Nifty? So there are various rules. So before that, let me show you how you can make a scan. How you can find out which stock is bullish or which stock is bearish. So let us go to a site called Charting. So this is the site charting.com. Here is a screener. So I'll give you the link of the screener in the video description. So from here you can find out which stock is actually trading above or below the 200-day moving average. So this is actually an end of day scan. You make sure you scan after 4 p.m. every day or before 9 a.m. every day, because do not scan on the intraday. So here you can see here is a simple formula that has been written on the charting website. So you can see the latest close is greater than SMA, means simple moving average, 200 period simple moving average. And we can scan from the Nifty 50 segment. So you can change your segment also. I'll currently scan on the Nifty 50 segment. So you can click on run scan. So you can see these stocks are actually coming in the scan. So Dr. Reddy's Laboratories, HCL Technologies, Britannia Industries, these all are actually bullish stocks because they are actually trading above the 200-day moving average. So let us check one example. Suppose Dr. Reddy's Laboratories. So instead of Bank Nifty, let us write Dr. Reddy. You can see the Dr. Reddy's Laboratories chart has opened. So you can see way back, Dr. Reddy's Laboratories has crossed the 200-day moving average on 15th of October 2019. You can see the date over here. So after that it has shown a decent rally. So now it is correcting, but still it is bullish because it is trading above the 200-day moving average. Now suppose there is another stock, say HCL Technologies. Let us check how HCL Technologies is doing. So let us open the chart of HCL Technologies. You can see this is not that bullish. Previously it was quite bullish because it is trading way above the 200-day moving average. But now it has tried to breach the 200-day moving average, and once again it is trying to come up above the 200-day moving average, but it is very close to 200-day moving average. So let us avoid this stock as of now. I'll show you the trading strategies later. Now let us see how you can find out which stocks are bearish. So just go to this scan. So instead of greater than, simple write less than. Click. So now your scan has changed. Latest close less than the 200-day moving average. So run scan. You can see these all stocks has come. So Vedanta Limited, Z Entertainment. Suppose let us check Tata Steel. So here let us write Tata Steel. See, Tata Steel is a bearish stock because Tata Steel is trading way below the 200-day moving average. Suppose let us check another stock, say Coal India Limited. So let us write Coal India. You can see how much bearish Coal India is. It has crossed the 200-day moving average on the month of July, and after that it has never came above the 200-day moving average. So it is continuously going bearish. So you can understand how 200-day moving average can predict whether a stock is bullish or it is bearish. Now let us find some trading ideas how you can trade using the 200-day moving average. So let us change the candlestick type. Suppose instead of normal candles, we are currently using normal candles. Let us use Heikin Ashi. So you can see this is now Heikin Ashi chart. So how we will trade the 200-day moving average using the Heikin Ashi? So one option is there. Let the stock cross the 200-day moving average. Currently you can see this Coal India stock has crossed the 200-day moving average and the Heikin Ashi is printing the red bars. Now let the bar colors change to green. So this is a pullback actually. We know the stock is bearish because it is trading below the 200-day moving average. Now we will wait for a pullback. So this stock has pulled back. Now once again we will look for a bearish candlestick, bearish Heikin Ashi. Bearish Heikin Ashi means you can see where the open equal to high. In this candle you can see the open equal to high. In Heikin Ashi the open equal to high. So this is a bearish setup currently. So now you can enter a short and you can see after that you have got a decent fall. So you can try this only once after the stock crosses the 200-day moving average. So let the stock first run its own journey, then let it pull back and then enter using a Heikin Ashi pattern. Let us come back to the index. Suppose Bank Nifty. You can see Bank Nifty has crossed above the 200-day moving average here on 18th of October 2019. So after that we got a pullback because we saw a red Heikin Ashi bar. Once again we got a bullish setup in Heikin Ashi because we got a open equal to low candle. So this is your buy candle. So after that you can see you have got a decent rally. So this is your first trade. So as this first trade is profitable, do not take the second trade. But you can see once again there is a bearish Heikin Ashi pattern. Then once again you have got a buy entry. Once again this was profitable trade. But we are actually going to trade only one trade. So this is how you can trade the 200-day moving average using Heikin Ashi candles. And friends, if you want to know more about 200-day moving average and how to trade it, I have written a blog post specially for you. So this is the blog post. The link of the blog post will be given in the video description. So you can come down to this blog post and you can find out more on how to use this 200-day moving average. And I have given you one more trading strategy in the blog post only. So friends, please check the video description where I'll be giving you the blog post link. So friends, I have shown you how you can identify whether a stock is bullish or bearish using this 200-day moving average very easily. And I have also shown you how you can create a scan using the 200-day moving average using a free site, and you can scan for stocks who are bullish or who are bearish. And I have also shown you how you can enter trades using the 200-day moving average and the Heikin Ashi candles. So there are other methods of trading the 200-day moving average. So in my next videos I will try to cover them, and in my next video I am going to show you how you can use the 200 moving average in intraday also. So that video will be specially helpful for the intraday traders, and this time I am going to cover the commodity market. So I'll show you how you can trade crude oil very easily using the 200 moving average and the combination of super trend. So you need to wait for my next video, and next video is going to be a premiere. Next video will be live on 5:30 p.m. on next Friday, and I'll be there with you so you can ask your questions to me. So friends, I have completed today's webinar. If you like today's video, please do not forget to hit the like button. Please also do not forget to share it with your friends, because if you share it, someone else can also be benefited. If you have any queries, just ask me in the comments. I'll try to answer you as early as possible. Friends, thanks a lot for watching this webinar till the end. Bye bye.